Hey guys, Akil here. Welcome back to another episode of the Trading Coach Podcast. Very special episode for you today. It's an interview with one of our traders on the platform, one of our accountability sessions, and man, this is an amazing episode. It talks a lot about the journey to getting into trading in the first place, to even kind of the nerdy details that go into backtesting and maximum favorable excursion, maximum adverse excursion, all of that fun stuff for you guys that are a little bit more have a little bit more experience. And what's pretty cool is that this trader actually started as a gamer. He went from a gamer to trading and fell across some self-improvement videos on YouTube, which led to a video called How to Become a Millionaire, Guaranteed 100%. Of course, you got to watch that when that comes out. That led him to learning about compounding interest, and that took him to learning about trading, where he eventually found our podcast, found our platform, and the rest is history. So make sure you check it out. Make sure you listen from start to beginning. I really enjoyed it, and I think you guys will too. That's why I want to share it. And of course, if you have the time, leave this podcast a rating and a review. That is a massive help in allowing us to grow the podcast. This is routinely ranked as one of the top trading podcasts out there, and I'd like to keep it that way, but I need your help to do so. All right, hope you guys enjoy.
All right. And Amar, is this your first accountability session or is this a subsequent one?
It's my first one.
It's your first one? Okay, very good. Well, thanks for coming on. We appreciate you doing this, of course.
Thanks for having me.
Yeah, you bet. So as a first timer, how long have you been inside of Tier 1? Just kind of start there.
I've been for a few weeks. Let me check. I can tell you the exact date. I joined on the 23rd, 6th. Yeah.
Okay, very good. Very good. And how have you found everything so far, the community and everything?
It was really nice. It was, it's, especially in the courses, you get a more structured approach than I had previously. Mm-hmm, okay. So I really like that. The only thing that was a little bit annoying was that there's no speed. You can't change the speed in the videos.
Really?
Yeah.
Okay. I can look into that. We should be able to adjust that with the embedded video. I'll check on that, but that should be something that we might be able to do. Yeah, but I'll look into it. Very good. So I guess tell us a little bit about who you are, what kind of normal life stuff outside of trading, and what got you into trading in the first place. Okay.
So my trading journey started roughly 3 years ago.
Okay.
And before that, I was playing video games basically all day long, right? and then I discovered self-improvement videos on YouTube, and I thought, man, it's like real life cheats, right? Mm-hmm. And there was this one video that was called "How to Become a Millionaire, Guaranteed 100%," and I thought, oh, wow, that's
I mean,
hey, I mean, I want that, right? So I watched that, and it was just about compound interest and stuff like that. And I didn't know anything about it, so that was really exciting. And I had some money in the bank, so I went to the bank and was like, "Well, I want to invest this." And they were like, "Oh, sure." Then they showed you the options, and it was like, "It's just 5% commissions per trade." And I was like, "Yeah, that's nothing, right? If I'm gonna invest it for a long time." Mm-hmm. And so that's when I started. And after I got home, basically the YouTube algorithm in the following weeks and the Google algorithm showed me a lot of trading videos on YouTube and a lot of those, clickbaity stuff. And I got really intrigued by that and started watching these things. And I was like, man, that's actually really exciting. So I started learning about this. I started watching a lot of Timothy Sykes, who's also a trading educator and trader. And I listened to a lot of his videos. I read a lot of blogs, and eventually I signed up with his subscription and bought a few DVDs. Okay. And that's how I got started.
Very cool. How did you find Tier 1 after that?
So I think the first thing that I that I was able to find was Akil's podcast.
Okay.
And I was just listening to it while still learning, and kind of dabbling in penny stocks.
Mhm.
And I didn't really find profitability, but a few months ago, I found one strategy was kind of working. And I used the things that I learned in the Ascension workshop and from Akil's podcast to find to backtest it and look at it historically. And I saw, man, this works like 80-90% of the time. This might be really good. And I got super overconfident, and that's the first time where I doubled down when the price went against me. Before that, I always cut my losses quickly, always. But after that, I was like, man, this works so much. This works so many times. It has such a high win ratio, and I can see it in the historical data. I'm just gonna bet more the higher the price goes.
How did that work out for you?
That was well, I blew my first account.
Oh no, I'm sorry.
Yeah, well, it's okay. I on purpose I only had a very small account, so it wasn't a lot of money. But I was like, man, okay. I was really down after that, and I thought, okay, I really need a really structured approach. I can't just trade on my pattern recognition alone and stuff like that. So I wrote Akil an email and I asked him what he would do in my situation. And he said, oh, look, even if you want to trade penny stocks, it will probably be good for you to also learn from us. You can take the things you learn here and apply them to penny stocks. And I told him, yeah, I was trading penny stocks and I was planning on going into Forex later. And so a few weeks later, I signed up, I had my trial, and then I became a full member.
Awesome. Well, very good. Well, we're happy to have you. That's an awesome story. How did you find, we'll get into the, what you're working on now in just a minute. But when you went from, obviously you said you bought some stuff from the other guy, Timothy Sykes, and then you also enrolled here. How did you find, I guess, the material different or maybe better with what we have? What do you like about what we do versus what you experienced prior?
Yeah, the biggest difference, I mean, the foundational things are roughly the same, right? I mean, it's what is a candlestick and stuff like that. It's basically the same, right? It's not a very big difference. But what I really liked here, that you backtest and that it's a really structured approach and everything is really, really rule-based and you don't leave a lot to chance or interpretation, stuff like that. So that's what I really like, because I'm a very rule-based person and I find it very easy to follow rules, and I find it extraordinarily difficult to decide things when I'm really unsure which one it is, right?
Yeah, for sure.
If it's like you don't know, okay, is this now a breakout? Is it not a breakout? When would I say it's a breakout? And if you don't have these rules, and if not everything is written down in your plan, it's very difficult. And I really, really enjoyed this year.
Awesome. Well, absolutely. Yeah, that's really important, because I mean, what can happen is if you have an idea about something like a strategy or a pattern or something that you think you want to trade, and then you go in and start trying to test it, or then even trade it in real time, and you don't really have rules, you'll end up having a variation of the same thing often. So you'll end up entering trades that are kind of like them, kind of like the previous ones, but not quite. And then you just kind of have this, well, I'm not really sure about this one. Is this actually a breakout, or is this actually, the right trade? So that's why it's important to have rules and making sure that you're following the same exact thing all the time. Otherwise, you're technically changing it every time you enter, which if you're trying to do statistics and things like that, you're not going to get a good result. So that's awesome. So where are you at right now in terms of what's your next steps? What have you been working on inside the course material?
So since I have a lot of time on my hands, theoretically I'm a student, but since I've started with trading, I've done less of that with time and focused more on trading. Cool. So I've got a lot of time theoretically, and I've gone through most of the courses, and I'm currently backtesting strategy. Okay.
And how you've been a couple of weeks, right? You said you went through most of the courses. Just a word of caution. I know you have some prior knowledge. Definitely don't want to skip around and miss something very important. So I personally would encourage you to, even if you don't take massive notes. A lot of people like to do this. They like to go through like all the training just to kind of get an idea about where they're going. Where's my end result? What are the steps that I'm going to go through on my way there? And then they kind of go back and go through things and take more detailed notes. I kind of like to do that because I like to know where I'm headed, what's the next step, where's the path that I'm headed down. So as I go through pieces in more detail, I know what the end game is. At least for me, that's usually helpful. I think a lot of people find that helpful as well. So what are you testing? I'm curious what you're working on.
So I was thinking I want to have a trend following strategy, but in one of the videos, Akil was talking about the parabolic SAR, and I really liked the way that it works. I mean, from the formula, because it is very similar to what I've been experiencing and doing in penny stocks. So I went with that indicator, and I started looking at that and testing all kinds of. I have 2 basic entries, and then I have I don't remember how many, but different types of targets that I want to take, and I'm just noting down the maximum favorable and adverse extensions and stuff like that. And it's going.
Is this in stocks, or are you testing Forex?
Forex.
Okay, very good. Okay, cool. Yeah, the parabolic SAR is good for trend, obviously for trailing a stop or getting into a market and then taking out targets as you find retracements. What platform are you using? I'm just curious for analysis.
So far, I'm only using TradingView because
Okay.
I obviously don't need to trade right now.
Sure. Okay. Very good. Awesome. Well, how have you found the testing process so far? Do you have any questions or anything that I can assist with?
Yeah, maybe. It's I like backtesting. It's kind of fun, honestly. But the only
You're one of those people.
yeah. Just when you have a lot of data that you want to get, and especially if you have a lot of targets and stops, and you have to write and measure out every single extension. I mean, maximum favorable and MFA and MAE. No, MFE and MAE. Yeah. For every single one, it's the typing is kind of annoying. That's the only thing.
Okay.
But I don't know if I have too many, or is that okay? I mean, and it seems that I have so many, because then you have to cross everything with everything, right? Every entry with every target with every stop, and then you have like a whole bunch of them, and then you have to. Is that correct, or is that too much? Or I have, for example, as targets 1 ATR, then 2 ATR, and then I have a previous candle high, for example, or the current candle high and the previous structure and stuff like that. And I don't know if I should just take less of those and then see what works best, and then try again and fine tune it, or test everything from the beginning.
What you could do, it sounds like you got multiple exits that you're testing, and you do have multiple entries. What I would do is separate the, you could put all the trades together, like each row is a trade. You could have multiple entries. You're using Excel, I assume, to track all this. You could put like a data drop-down list of all the entries that you want to choose from, choose the entry that you took. Then what you can do as far as testing exits, if you're looking for, like you said, trend following, you're looking to trail the market with parabolic SAR or some other such indicator, or moving average, and plotting that and trailing behind the market. Figure out where you'd want to exit. Okay, at this point, I definitely want out of this trade. I don't want to test multiple positions scaling out. If you're going to trade multiple, contracts or multiple lots, you're going to get out at target 1, target 2, 3, whatever you're doing. What you can do is say, okay, here's where I'm going to get out no matter what. The trade's over. Pick that scenario or those rules, whatever that's going to be, maybe to retrace into a specific SAR, indicator setting that's, greater, farther away from price, and say, okay, that's where I'm getting out no matter what. And then what you could do is have different, add some other SAR indicators that have smaller settings, so they're closer to price, and then test exits or other exits. And what you can do is say, okay, if my maximum favorable excursion is going to be from my entry, of course, all the way to the highest point in the case of a long trade. In the case of a short trade, it's the lowest point before I hit my absolute exit, right? So whatever that kind of higher setting SAR might be, or whatever your reason is for exiting the trade, no matter how far it goes, right? So whatever that condition is, what you can do in your Excel sheet is you record the entry price, of course, then you will record your MFE price. So what's the farthest point the price went before getting stopped out? Now, it could be really low and it could be like the stop out price, right? You may not even hit a target at all. But if it's really long, you'll have the entry all the way to the highest price, right? And before you would have your absolute exit. And then what you can do is say, okay, my other exits are going to be here and here and here on the chart that I want to test. And in your Excel sheet, you can just have like an X or like a yes or whatever, and do a formula that says, hey, if I hit target 1 X, or put the target 1 price in, target 2, 3, however many you're testing, if all of those are within the maximum range, you can figure a formula out and say, hey, I hit target, and then calculate your pips. Does that make sense? That might sound confusing, but hopefully that made sense. Basically, you're taking the entry to your farthest maximum favorable excursion before you want to exit the trade entirely, no matter what. And then you're going to put that price in, and then you're going to put the additional prices in for your exits. And then you can tell Excel to have, target 1, target 2, target 3 pip calculations, and say, or then also, and put the prices in as well. And then if that price is less than, in the case of a long trade, than your highest point in price before absolute stop out, then you can have it calculate, positive pips or, negative pips if it's a complete stop out. Does that make sense? That might help you in terms of doing less work by just putting in the MFE price before an absolute, complete exit. And then all you have to do is put your prices in for target 1, 2, and 3. And if it's between the range, right, of the entry and the highest point, in the case of a long trade, then I hit target 1 or I hit target 2, or then I got stopped out. You can configure the stops as well. I don't know if that helps. That's something that I've done, where I just kind of record my farthest point in price. And then if my target prices are within that range, I know that I would have hit them before getting absolutely stopped out. So it's just like less work in terms of, you have to do some formulas obviously in Excel, but it's quite a bit easier than, recording 3 or 4 different exits for one trade on multiple lines or something like that. You can kind of just do it all in one entry. There is some formula work involved, so I understand it's not terribly simple. Does that make sense? Do you have a question on that? Does that make sense?
Yeah. Well, can I just repeat it so I can see if I got it? Okay. So I take my maximum stop, right? The one that's farthest away, where I'm saying definitely I'm going to go out at this point. Yep. And then I calculate the maximum favorable, right?
Before that happened, yep.
Okay. And then if my targets are within that, I obviously got executed.
Yep.
And after that, I take the stop levels and the stop dates, right? And then I can create formulas which test simply which happened first.
Right. So if you have your initial stop loss, right, which is when you enter the trade, wherever that's going to be, and that may move over time, obviously, but your initial stop loss will be set, and then you can have, so your target 1, 2, and 3 prices. Let's say you got stopped out entirely, right? You didn't hit any targets that you would have wanted. You would take your initial stop loss price, put it in for targets 1, 2, and 3 cells, and then it will obviously be, not within, within the entry and the MFE price. So you know that those are complete stop outs, and you can tell Excel, hey, calculate this as a loser. And if it was long, if you're short, just reverse everything. But yeah, that's pretty much how it works. You basically take a price range from the entry to the farthest point that you want to have before an absolute exit, and then you just fill in your prices for target 1, 2, and 3. And if it's between the range, you have a target that would have been hit. So it's pretty basic.
Okay.
Does that make sense?
Yes.
Excuse me. Cool. Very good. So you're testing. Hopefully that helps with your testing and trying to test different exits. Once you get this tested, you said you had a couple different entries as well. You might find it easier to pick your favorite entry, and then just look at having a larger portfolio. I don't know what time frames are you looking to trade? Is it like swing trading?
Daily
Daily charts. Okay. Okay, in the case of daily charts, you can have a few different entries and manage multiple markets. It's not a big deal because everything is so slow. So forget what I was going to say. That's why I asked. But if you're trading lower time frames, it's often easier to trade a larger portfolio and just like one entry and trading like 4 or 6 pairs or 8s or something like that, depending on, again, how quick you might be trading. But if you're trading the daily chart, you can look at maybe 2 to 3 entries and 10 markets or however many you think you want to have, and you'll probably be fine in terms of amount of time and difficulty, because again, everything's moving so slow. You only have to check it at the end of the day, so you should be good there.
Okay,
awesome. Omar, anything else you want to highlight here for your session? And if not, we'll move on to the next person. But if you have any other questions, let me know.
Let's see. I think so far I don't have any questions. Yeah.
All right. Well, very good. We'll come back in like a month or two and kind of see where you're at and share with the group we can talk about your struggles. Make sure, obviously, I'd probably be Jason unless I happen to cover for him again, but wherever you find yourself or any questions you've got that you went through backtesting, or really any light bulb moments for you that were like, hey, I was doing this and then I decided to change it and do this instead because maybe you watched something or in the trainings or somebody said something to you. Any kind of those light bulb moments are really important for the rest of the group to say, hey, I had that problem and I can do what Amar did and it'll be better. So if you got any of those things, make sure to write them down for next time, and we'll check on your progress then.